Look at the Japanese yen right now. It just hit 162.80 to the dollar, a 40-year low. Now look at what's happening on Wall Street. Traders are piling into a trade that destroyed fortunes. A trade so dangerous, they gave it a name. The Widowmaker. It's back. And if you think this doesn't affect you, think again. Because when the Widowmaker trade unwinds, it doesn't just hurt hedge funds. It crashes currencies. It destroys banks. It wipes out retirement accounts. And right now, America is trapped in the middle. This is Crash Historian, where history uncovers the hidden forces shaping money, power, and the modern world. If you enjoy documentaries that uncover the hidden mechanics behind economics and history, consider subscribing. And let me know what city you're watching from. I'm always curious to see how far these stories travel. Here's the full story they don't teach you in school. So what exactly is the Widowmaker trade? It's one of the most notorious bets in financial history. Traders borrow Japanese yen at near zero interest rates. Then they use that cheap money to buy higher-yielding assets elsewhere. U.S. Treasuries, European bonds, emerging market debt, anywhere they can get a better return. The trade works like this. You borrow yen for almost nothing. You convert it to dollars or euros. You buy assets that pay 5, 6, even 10%. You pocket the difference. It's called the yen carry trade. And for decades, it was free money. But there's a catch. A massive one. When the yen strengthens, when the currency you borrowed suddenly becomes more expensive, the trade reverses. Investors rush to buy back the yen. They sell their dollar assets. They close their positions. And when everyone does it at the same time, markets crash. That's why they call it the Widowmaker. Because when it goes wrong, it doesn't just lose money. It destroys fortunes. It bankrupts institutions. It takes down entire economies. And right now, the conditions are perfect for it to go wrong again. To understand how dangerous this is, we have to go back to 1998. Long-term capital management, a hedge fund run by Nobel Prize winners. The smartest guys in the room. They were betting billions on the carry trade. Borrow cheap yen. Buy higher-yielding assets. It was supposed to be risk-free. Then the Russian financial crisis hit. Investors panicked. They rushed to safe assets. The yen strengthened. The trade unwound. And in a matter of weeks, long-term capital management collapsed. The Federal Reserve had to organize a bailout. 14 banks. $3.6 billion. The entire global financial system was at risk. If Nobel Prize winners couldn't survive the Widowmaker, what chance do ordinary investors have? But it wasn't just 1998. In 2007, the carry trade unwound again. Investors had borrowed trillions in yen to buy risky assets. When the subprime crisis hit, they rushed to close their positions. The yen surged. The trade collapsed. And the global financial crisis got worse. That's the pattern. Borrow cheap yen. Buy risky assets. When the crisis hits, and it always hits, the trade reverses. And the unwinding causes more damage than the original crisis. Now it's happening again. The Bank of Japan has spent years suppressing interest rates. From 2016 to 2024, they capped 10-year government bond yields near zero. They printed trillions of yen. They bought trillions in government bonds. The result? The yen became the cheapest currency in the world. The perfect funding currency for the carry trade. Investors borrowed yen by the trillions. They bought U.S. treasuries. They bought European bonds. They bought anything that paid a higher return. But now everything is changing. The Bank of Japan is raising rates. Slowly. But the gap between Japanese rates and global rates is narrowing. The yen is strengthening. Investors who borrowed yen are facing losses. They're rushing to close their positions. They're selling their dollar assets to buy back yen. And when they sell those dollar assets, who buys them? Nobody. U.S. treasuries are the foundation of the global financial system. When a trillion-dollar trade unwinds, it doesn't just hurt hedge funds. It crashes bond markets. It raises interest rates for everyone. It makes borrowing more expensive for governments, for businesses, for you. And here's what nobody's telling you. The United States is trapped. America has its own debt problem. 30% of U.S. debt is held by foreign governments. Japan is the largest holder. They own more than $1 trillion in U.S. treasuries. When Japanese investors unwind the carry trade, they sell those treasuries. The demand for U.S. debt falls. Interest rates rise. The government's borrowing costs increase. This is the trap. If the Bank of Japan raises rates to defend the yen, the carry trade unwinds faster. Japanese investors sell more treasuries. U.S. interest rates rise. America's debt burden becomes even harder to manage. If the Bank of Japan keeps rates low, the yen continues to fall. Inflation rises in Japan. The economy destabilizes. And the carry trade continues until the next crisis triggers a collapse. Either way, America loses. And ordinary people pay the price. When interest rates rise, mortgages get more expensive. Credit cards get more expensive. Business loans get more expensive. Everything gets more expensive. The widowmaker trade isn't just a Wall Street problem. It's a Main Street problem. It's your problem. So where does that leave us? You. Right now? Today? The widowmaker trade has come back before. Each time, it has ended in crisis. Each time, ordinary people have paid the price. The yen carry trade is estimated at over $2 trillion. When it unwinds, and it will unwind, it will trigger a chain reaction that nobody can stop. The only real solution is to address the debt, to grow the economy faster than the debt grows, to make hard choices about spending and taxes. But that's not what governments do. They take the quiet path, the one that transfers the burden to you. This is Crash Historian. Every week, we uncover the hidden forces shaping money, power, and the modern world. If you want to understand the real story behind the headlines, consider subscribing. Because the more you know about the past, the better you can protect your future. Until next time, stay curious, stay informed, and never forget, history doesn't just repeat, it teaches.